Okay, so you look at the global economy right now and you see a lot of slowdowns, a lot of uncertainty, but one country, it's telling a completely different story. India has just absolutely shattered its own export records, and today we're going to break down exactly how they pulled it off.
I mean, think about it. We've got rising tariffs, supply chains are under a ton of pressure. The whole global forecast has been kind of gloomy, right? Most experts, they were pretty sure that emerging markets were going to struggle, but India, they didn't just hold on, they pushed forward in a really, really big way. And here it is. This is the number that's making all the headlines. For the fiscal year 2026, India's total exports, and we're talking both goods and services here, hit a staggering $860 billion. Let that sink in for a second. To put that into perspective, that is the highest number India has ever recorded. Ever. So that record figure, it represents a 4.22% jump from the year before. Now, I know what you might be thinking. 4%. That doesn't sound huge, but you have to remember the context we're talking about. Achieving any growth at all in this kind of economic climate is seriously impressive. This is a crystal clear sign of momentum. So that just begs the question, right? What's the secret ingredient here? What is driving this incredible growth? How on earth did India manage to set a brand new record in such a tough global environment? Well, to figure that out, we've got to look beneath the surface of that big, shiny number. All right, let's dissect these numbers. The whole story is really a tale of two different sectors. That $860 billion, it's split between two main categories: the physical goods that are being shipped out, and, of course, the booming services sector. And when you look at the split, it's actually almost perfectly balanced. Goods exports make up about 51% of the total, and services make up the other 49%. I mean, that's pretty much a 50-50 split, which on its own is a great sign of a diversifying economy. But the real story, the juicy part, is hidden in how each of these sectors actually grew. And here's the key takeaway, right here. Goods exports, they barely moved. We're talking less than 1% growth. It pretty much just crawled along. The real engine, the powerhouse, was the services sector, which just exploded with nearly 8% growth. But here's the interesting part. Even with that slow growth in goods overall, one specific industry totally bucked the trend and played an absolutely critical role. So, what's that superstar sector? It's pharmaceuticals. It's a true powerhouse within India's goods exports, and a huge reason why that total number didn't shrink. It was the hero of the goods story. You've probably heard India called the pharmacy of the world, right? Well, this quote absolutely nails the reason why. It's that unique combo of affordable pricing and assured quality. It sounds simple, but it's a formula that has had a massive global impact. So let's talk scale. Just how big are we talking here? Okay, the scale of this industry is it's immense. We're talking about more than 10,000 manufacturing units. That makes India the third largest producer in the entire world by volume. And get this, they produce over 60,000 different generic brands. That covers pretty much every single major therapeutic category you can think of. And the global impact is just undeniable. Think about it. India supplies 20% of the world's generic drugs. That means 1 out of every 5 generic medicines on the planet comes from India. And it's the biggest supplier of low-cost vaccines, playing this absolutely critical role in global health programs for huge organizations like UNICEF and the WHO. And this isn't some recent thing. This has been building for a while. Just look at this growth trajectory. Pharma exports have skyrocketed. We're talking a 16-fold increase in about 25 years. They hit $30.5 billion in exports just last fiscal year. Today, this one single sector makes up about 7% of all of India's goods exports. So what's fueling this incredible engine? Well, the success of the pharma sector definitely wasn't an accident. It's been driven by a very deliberate, very smart strategy, a combination of government policy and some serious strategic investment. So at the very heart of this strategy is a government program called the Production Linked Incentive Scheme, or PLI for short. The easiest way to think about it is like this. The government offers a financial bonus, a reward, to companies for making more of their products right there in India. The goal is super simple. Make it here, import less, and export a whole lot more. And the government has been really laser-focused with this support. There are specific PLI schemes for finished medicines, for medical devices, and, crucially, for what are called bulk drugs. And these schemes, they've already attracted a ton of investment, all of it driving towards one single goal: making the Indian pharma industry more self-reliant and more competitive on the world stage. Now, a really key part of that self-reliance strategy involves something called APIs, or active pharmaceutical ingredients. Just think of an API as the main active component in any medicine. It's the stuff that actually does the work. A huge goal of these PLI schemes is to cut down on India's need to import these crucial ingredients, which helps secure their entire supply chain from start to finish. Okay, but making great products at home is really only half the battle, right? You've got to be able to sell them to the rest of the world. And that's where India's really smart strategy for securing new trade deals comes into play. A perfect example of this is the new free trade agreement with the European Union. This one deal opens up a massive $572 billion market for Indian goods. It slashes tariffs and basically makes it way easier for Indian manufacturers to plug right into the global supply chain. It's a game changer. And it's not just the EU. It doesn't stop there. Similar agreements with the UK and New Zealand give them zero-duty access for tons of different pharmaceutical products. So the broader strategy here is pretty clear, right? They're diversifying where they sell their stuff. It's the classic, don't put all your eggs in one basket approach to reduce risk and make sure that growth is stable for the long run. So, you've got this strong foundation, you've got expanding access to global markets. Where does India go from here? Well, the ambitions are really high, and believe me, the plans are already in motion.
Just look at these projections. I mean, this is wild. The domestic pharmaceutical market alone is expected to more than double in just the next 4 years. We're talking from $60 billion today to $130 billion by 2030. That kind of domestic strength is the perfect launchpad for even bigger and better export performance. And the government is already looking ahead to the next frontier. There are new initiatives like something called Biopharma Shakti. This is a huge push to make India a global hub for biopharmaceuticals, the next generation of really complex medicines. Essentially, it's a strategy to level up, to move up the value chain from making super reliable generics to creating cutting-edge, innovative drugs.
So all of this leaves us with one final big thought. The success of India's pharmaceutical industry, it really provides this powerful template, right? You've got smart government strategy, private sector drive, and huge global ambition all working together. So the big question now is, can this blueprint be copied and pasted? Can it be used to unlock the potential in India's other key sectors and fuel the next great export boom?